Hello, everyone. I'm JEAN-CLAUDE and welcome to this weekly update of the Beyond the Valuation. With me, of course, is Mr. Andy Sheckman. Find his work at milesfranklin.com. Andy, welcome back to the show. How are you?
Good to see you, my friend JC. Good to be here, buddy.
How's the connection? We were having some issues in the green screen here just before we went live. Does it sound for you now, Andy?
Yeah, I don't know if other people hear what I do, but it seems as though you're kind of everything you say I hear twice. It's kind of scratchy and I hear it twice. I
Let
don't
me
know if
ask
the
the
people out
live
there hear that.
viewers. We're casting now on Twitter, Rumble, and also on YouTube. Guys, give me a 5x5 if you can hear me. Okay, maybe it's the connection between A and I that's a little bit wonky. I want to make sure you guys can hear us okay here before we go too far in the show. We have a lot to discuss here today. So again, it'll take a few seconds here.
Yeah, they hear it too. They hear it. It's a weird echo, JC. It's double speak.
Let me try this. I'm going to reboot my computer while we're live. So I'm gonna let you do an intro, talk about what you're tracking this week. What are the items of importance? I want to share that with the audience while I reboot, and I'll come in new. And if we could do the show, we'll do the show, but we'll take a decision at that point. Okay. I'll
Good luck on that.
here, and I'll be back in about 30 seconds or so. Okay.
Right on. How's everyone doing today? I think I'm going to steal JC's show from here on out. Hope you guys are all well. I'll tell you a little bit about my travel experience. I was speaking at the Vancouver Resource Investment Conference this weekend, which was an amazing show. But for those of you who haven't done much in the way of traveling lately, you're really not missing anything. I left Saturday morning at 4:45 in the morning. I had to speak in Vancouver at 8 in the morning and 11:30 on Sunday. And I live in the southern part of Florida, and you're talking straight diagonal about the farthest place away in the United States, or North America rather, to get to where I was going. So it was a long day and I knew it. So I had a layover first in Detroit and flew to Detroit without fail, and land in Detroit only to find out that my flight from Detroit to Seattle is an hour delayed. All right, I got NFL football. I can sit at the bar and watch it because, they told me then that my flight to Seattle, when I get into Seattle, I'll miss the connection to Vancouver. So they're going to put me on the 8:30 flight, which is a 6.5-hour layover in Seattle. Well, there are 2 games on that day. I sit at the bar and watch some games. I knew it was going to be a long day, but then at 8:35, as we're boarding, they say, everyone get off, where flight's canceled, and it won't take off again until tomorrow at noon. Well, I would have missed both my presentations that morning, so I rented a car at 9 o'clock at 9:30 at night and drove to Vancouver in the pitch black, 3 hours, and by the time I got to bed, it was 25 hours after I had woken up, only then to get up a few hours later to go speak, and I was terrified. Because as I'm sitting backstage talking to Grant Williams, I couldn't even put 3 words together. Like my brain wasn't firing, and it turned out all right. But man, I'll tell you. So then yesterday, I after being at the show for 2 days, I drove back to Seattle, flew home, and then last night I was so tired. The craziest thing of all is I sat and watched the ceiling all night long. Now, normally that doesn't happen to me, but I was so tired I couldn't even sleep. I don't know, man. I got too much stuff running through my brain. Maybe you guys do too. It's part of the, it's what's going on in the world these days. JC, we don't need you anymore, so you can just leave.
Okay. Have fun with the show, Eddie. You have the controls, sir.
Yeah.
Actually, I would trust you to run a show without me on my channel.
Well, thank you. You know what? It sounds better now. It sounds better.
I don't know. I had to reboot, and there was something hung in the background. It took a while for the computer to come back up, so there was a rogue process in the background. So hopefully we're back. And yeah, so guys, well, first of all, thank you for joining us, and I apologize for that little mishap as we just started the live show here. Hopefully my slide deck is still up and running. Yeah, it's kind of rebooting now. Before we get into too much of the news here on the financial front, I did want to share this with you, Andy, and with our audience members. Yesterday was a big day here in Canada. Of course, the federal court just ruled that the Emergencies Act and the invocation of the act with respect to the Freedom Convoy was unreasonable, unjustified, and that it, in fact, in fact, violated our charter rights. That's big news, man, because for a couple of years now, we thought we were all crazy asking for freedom of speech and wanting to talk to our government about our ideas on how to best protect Canadians, and yet we were treated like the fringe minority, and we got the jackboot on our throat. So it's kind of cool today to see the federal court ruling on the side of Canadians and freedom, but at the same time, it's kind of bittersweet, bringing us back to the tyranny that we're all facing right now, and how still there's a fight before us here moving forward.
Yeah, there is. I'm sure it's going to open up the, Trudeau or his administration or the government into all sorts of lawsuits. Look, when you sidestep the rule of law and due process, you cross a line that I think it's tough to come back from, and rightfully so. I'm glad that the courts, did the right thing.
Mhm.
And there are a lot of things that you could say that will be in front of the Supreme Court, where I'm hoping that they do the right thing as well. And
Right.
that was one of the things that we have well, we still do, but a very vibrant Canadian storage business with Brinks in Montreal, Toronto, and Vancouver. And when he did that, it scared people to the point of moving $75 million worth of metal from Canada to the United States. And all of those people who invested in Canada did it because they were scared the US would do something like that. So yeah, I'm glad to see that happen. It'll be an interesting story to follow through to see what kind of lawsuits are brought against the government for not only, the taking of the freezing of their money, but all of the things that happen that completely sidestep due process and the rule of law. So glad to hear it.
Yeah. Guys, if you want to see a little bit more details on that, I did a special report on X yesterday, of course, talking about the Emergencies Act violating the charter rights. This is a brand new breaking format that I'm trying for you guys here on X. I also duplicated that video on Rumble. If you guys are not on Twitter, you can find it there as well. Okay, Andy, let's get into some of the weird stuff happening right now in our crazy world of financial markets. We're at that pivot point again here. Zero Hedge was just posting the other day. We have to watch for the signal here for when the Fed will end QT, quantitative tightening, and getting to quantitative easing. Here, the Bank of Canada just kept rates today. This was announced earlier this morning, unchanged at 5%, but is expecting signals and an end to the rate hike here, and perhaps going back the other way. So we seem to be at that pivot point. In my interview with Marty Hibbs yesterday on the Beyond the Charts, his opinion, and I want to have your take on this too, like for the audience members here, bring different points of views. His opinion is the Fed is going to stall for as long as it can before reducing rates, that their best strategy for now is to do nothing and kind of see and wait attitude. What's your opinion? Are we closer to the reversal and the negative rates, or are we perhaps here moving sideways here for a little bit longer here in our markets? What are your thoughts, Andy?
Well, it's an interesting question. First of all, the rates that they would change would be the overnight lending rate, the federal funds rate, which you could argue there have been times in history where they will lower the federal funds rate only to see the back end of the bond market, the 10 and the 30-year rate, go much higher because it signals inflation. Their borrowing costs become much lower, and we're addicted to spending. So they start spending more, which creates inflation, which then heats up interest rates on the back end of the bond. And the 10-year treasury is what all of the loans, the car payments, and the mortgages are based off of. But look, it's interesting. Right now, M2 is expanding, and everyone's been talking about M2, the broadest measure of the money supply, decreasing and contracting, but it's actually gone up 0.5% in the last month. And this is a very deliberate act. I think that it's something that they will continue to do as the Fed resumes QE and eventually stops quantitative tightening, to your point. And I guess I would simply say that, look, there is no such thing right now about fighting inflation. I don't care what they try to tell you. They're lying about it because, look, first of all, we lie about the CPI numbers. This is an important thing because, look, the Fed's mandate is to strive towards full employment and to keep inflation in check and price stability. Well, in terms of CPI, we've talked a lot about John Williams and Shadow Stats, how he shows the real numbers, the numbers that were used by the government before they manipulated to fit their inflationary agenda. And he would tell us that inflation is between 9 and 11% right now, not what they are telling us. And when we look at the other side of the equation, the employment numbers, quietly, they just revised downward the 2023 numbers after telling us how great the unemployment numbers were by 40% or 440,000 jobs. Oops, sorry, we overguessed. And so when you talk about being lied to or being given the right information, it's not. But look, we have foolishly raised the debt ceiling 79 times over the last several years. We printed trillions and trillions of dollars, and more so in the last 4 years than in the history of the country preceding it. And the Fed blew up its balance sheet in 2008 from 800 billion to now at one point over 9 trillion. We're now at just over 8 trillion, or just under 8 trillion right now. But here's the thing. It seems to me to be disingenuous to, in the very end, start fighting inflation in a real way after everything we've done for years is inflationary, including lying about the metrics. And yes, they're talking about ending QE this year, despite a balance sheet that's still over $7.6 trillion. In other words, it's 85%, just 85% of its peak 15 plus years after the great financial crisis. So I don't think they'll do anything substantive. They realize that they'll blow up the markets. Look, this is being done to lower rates to accommodate their ever-increasing budget, their addiction to spending, the growing Social Security deficits, where since 2021 we've paid out more money than we've taken into the program, and by the Congressional Budget Office's own numbers, will be depleted by 2033. And let's not forget, it's an election year. So yeah, I think if you look at everything from Bernanke saying the subprime crisis was contained to Powell telling us that there is no inflation, and then it's transitory, and then it's structural, then it's okay. And we're lied to continuously and constantly. And again, the revision of the labor numbers or the continual massaging of the CPI metric, all of this stuff tells me that whatever they say, you can pretty much do the opposite. So they're going to stop quantitative tightening, and they're going to continue to pump money into the system, because I think as much as they'd love to see inflation subdued, they realize if they keep pushing the envelope with rates above 5%, they're going to blow up the entire system.
Let's talk about, you kind of mentioned this earlier in the pre-chat. We're heading into this election year, and so Trump just won Iowa caucus last week, big landslide. Just last night, now in New Hampshire, just some surprise of some of the pundits, but yet now this is setting the stage for perhaps a bigger constitutional battle, where perhaps more court cases take him off the ballot, put him on the ballot, but at the same time, the incumbent pretendency will need to push up the numbers and show to everybody that everything's okay and that they've managed the economy okay. So on one hand, we're going to see maybe a rosy picture being painted on the economic front, and on the other hand, we're going to see perhaps this huge constitutional battle and perhaps even civil war. We've seen the movies and predictive programmings about that now too. How does that tie into everything? What are you preoccupied when you see now the game being played out at the political level, and what's
much like you said about what the Canadian, I guess it was the courts ruled,
the federal court.
It is a function of trust, and I think that I've always felt that that if we were a united country, we could get through anything. And if we were a country that was revered the way that we were for so long, we could get through anything. But we are a country that has lost its bearings, and the rest of the world, who has been united against the mismanagement of the reserve currency, against the sanctioning and the coercion and the bullying, all of that stuff, we could get past that if we were still the envy of the world, the place that had the rule of law. And I always talk about Lady Liberty holding the scales of justice, blindfolded. It's not working out that way. And if we worry about our elections, if we worry about the border, and I'm talking about other people around the world saying, well, look at their country. They have no border. You can't do that in any other country in the world, including Canada, without facing severe problems. We have elections that are being called into question, and where a third of the country believes that they were not fair in 2020. We have all of this divisiveness, all of these problems that the world is looking at the United States and saying, what's happened to them? They've lost their bearing. So yeah, I'm very concerned about that. And JC, when I look at, and I'm being dead serious, this is not about to sell gold or anything. I'm being dead honest to God. I say this as a dad. Look, man, you got, not only do you have 200 meetings between now and October for the BRICS in Russia, but the big meeting is in October, where over 30 countries have formally applied already, another 20 informally. And maybe we get the common settlement currency then. Maybe, I don't know. It's coming, that I do know. But the point of it is we have that in October and the election in November. You can see that Trump is undoubtedly going to be the Republican candidate. What's going to happen? I think most people, if they were
unless they put him in jail, that's what I was getting at here.
Well, right, but they're waiting for a shoe to drop, and if something like that happens, there will be a civil war.
Yeah,
there will be, and God bless my friend who I grew up with in Minnesota. His name's Dean Phillips, and you keep hearing a little bit more and more and more about him. He actually came out last night, and he said while he was in, I think, New Hampshire, he stopped by a Trump rally across the street. And he said, I wanted to be, I wanted to be fair. And he said they were standing out in the cold for hours. And I went and talked to them, and they were all very nice, very cordial, very polite, and said they feel that no one in the world is listening to them except for Trump. And he said, I got to tell you, the Democratic Party, my party, he says, is delusional. And he's the first person to step across those partisan lines to, again, it's so divided, and even in the political scheme, that people are waiting for something like this to happen. And they realize that all of the cases brought against Trump, the majority of them are ridiculous and frivolous and baseless. And then you look at, the people who are bringing suit against them, they're criminals themselves. Yeah. So this is an issue. Look, the last time someone was taken off the ballot, it was Abraham Lincoln. It preceded a civil war. Could we see that? I really would like to hope not, but when you look at the divisiveness between red and blue and black and white, and yeah, could it? Maybe. I hope not, but that's where we are right now. So a lot of people are waiting for that shoe to drop. This is that, like you were talking offline, there's this sense of uneasiness, of stress. You take an airplane and you see how stressed people are. Everyone's a little tripped out right now, a little on edge, angry. And that's the kind of thing that puts someone over the edge, because what this country stands for is, freedom of expression, freedom of religion, fair elections, a fair judicial system, and all of those things have been called into question. And the rest of the world, it's not lost on them. So yeah, I think this is a big time coming up, and I expect there to be something. Honestly, I do. I don't know what. Trump stood in front of the camera last night in New Hampshire, said there will 100%, he said, there will be some form of a terror event when you let 10 million people into your country. And if 0.2% of them are there for nefarious reasons, that's 20,000 people that want to do harm. And again, I hate to be this way, but that's where we are. And I think that's the kind of unease that a lot of people feel right now, even if they can't articulate it.
Yeah, no, we're feeling that. And I'm with you as a father in there too, because I'm looking at all of this. I'm like, where are the opportunities for my kids in this world that's developing before us? And that's part of the video I did last night too. Like, I hope that cooler heads prevail here and then we come together. Yes, there's a big divide. A lot of that divide is being caused by design, divide and conquer here. But hopefully the voices of reason can come to the top here, and we can come together to rebuild what we actually want here, both in the United States and, of course, here in Canada. Let's go around the world, Andy, and switch focus here to China. This was a couple of days ago on January 22nd. As China stocks crash, Beijing proposes a multi-trillion rescue package here. And then we saw a couple of days after, on the 23rd, actually, a futures flat after back-to-back record after China unveils massive market bailout. Is that going to affect us in different conversations I've lost in the last couple of days? We're suggesting actually this might be good for the U.S. in a way, maybe even short term, in the sense that people might be looking at the dollar or some other investments here that are perceived safe havens here as compared to what's happening in China. What's your take? What's the tsunami here unfolding with us here with this $1 trillion bailout?
It's no different than what we're doing here. I mean, it isn't. In fact, what we do here is much worse than that. We've added way more in the way of bailouts and things that are not even as transparent as that is. This short-term bank lending program, 140 billion, where banks can borrow money from the Fed, pledging toxic assets, and then borrow it at 4.5% and give it right back to the Fed and get paid 5 1/3 or whatever. The whole thing is all, we're constantly funneling money into the system. But let's take a step back of that. While everyone is looking at the problems with that they are facing right now, and they're real problems. But at the same time, they've bought gold for 14 straight months in a row, 14, and they have every single day in 2023 average purchases of 760,000 barrels of oil every single day in 2023. They bought 1.39 million barrels of oil every day in the month of December. And so, yes, it's real. But as people are focusing on this, the Chinese are gobbling up all of the world's commodities, the rare earth metals, the energy, the precious metals. And so I would argue that when we have $155 trillion in debt, we've burned through our strategic stockpile of oil, and we have $5 trillion in assets, the biggest being student debt of $1.4 trillion. These guys are loaded with assets. Yes, they're having trouble with their stock market and their real estate market. They're over leveraged, fine. But they have more assets than we do by a massive magnitude. And they also are not frowned upon on the world stage as being coercive and as being entangled in wars all around the world, and that just aren't stopping. And so I think that, look, the United States, going back to what I was saying before, if everything was as it used to be in this country at home, and we had the tightest rule of law, we had unequivocally fair elections, we let everyone come into this country, but the right way, we had solid borders, we were not a divided country, we were united. In fact, it's funny, Putin just came out today or the other day and he said, any difficulties can be overcome if a huge country like ours is united. I don't know if he said that as a jab. At the same time, you have Saudi Arabia, who recently came out and said China was our biggest trading partner in oil in 2023 and for the next 50 years from here too. It's 50 years almost to the day that we have been the petrodollar because of our relationship with Saudi Arabia. So trade agreements are being struck with China all around the world. And I would argue that in many respects, they are much more adept or much more apt to be able to weather any storm than this country is. So, yeah, it's real, but I think their positioning and their asset base and the way that they are not viewed as a tyrant around the world, getting worse and worse and worse, that image, and have lost their ways here at home. Who's worse? I don't know. I think that they have a greater likelihood of being able to weather any type of economic storm for sure.
And it's not just China buying gold. Again, here, zero hedge central banks will keep gobbling gold in 2024. 23 was a massive year also. And now we're getting more and more rumblings. You and I have been talking about this for months, about this idea of gold-backed cryptos. Again, putting upside pressure here on the value of gold. Where does this all go? Anything new on your radar in terms of as you call it, the gold revaluation funds around the world, and how we're closer and closer to that date now? I know the bricks are coming up later this fall, but it seems to me that something has to break here, whether that's the liquidity window for the banks that are almost running out here, I think as of March. Something's going to break earlier than the fall. Where does that bring us with the price of gold?
Well, yeah, I mean, and that's right. In 2022, it was the biggest year ever for central bank gold purchases. 2023 was even bigger than 2022. So over the past 2 years, the central banks have bought more gold than at any time in history. And I've really talked a lot about that over the last few years, starting in 2020, how we saw this trend of repatriation and accumulation. In the last 3 years, JC, 40 million ounces, 40 million have been taken off of COMEX. Where did they go? Who's buying them? And I want you to think in terms of slow and methodical. That's the Asian way, the Chinese way. And shotgun, instant gratification is not fast enough is the U.S. way. Last week, coming off of COMEX, the biggest I have ever seen, 877,000 ounces were delivered off of COMEX. Who's buying that? Who's got that kind of money to take possession of 877,000 ounces? We're also seeing massive what's called exchange for physicals, where contracts are being bought in COMEX and exchange for physical or delivery in the United Kingdom. And I believe that is because both gold and silver, which are both witnessing this phenomenon, are priced way too low on COMEX. And I'll explain that in one moment, but they're both not priced properly and they're too cheap. And I think you're seeing a rush for physical also with the industrials. We've seen 350 million ounces taken off the COMEX and the LBMA in the last 2.5 years, right? And India imported 400 million ounces and in the last 2 years. How much of that went to India? That's way more than you're going to find on, and that's way more than that's on COMEX. And so when you talk about the rush for silver, look, 250 million ounces were used in solar panels last year. It's starting to disappear. And it's interesting as a side note, and then I'll talk for just one moment about Shanghai. Okay. But, you know, I've often talked about the silver that's used in warfare. And I would talk about the Tomahawk cruise missile. And if you Google it, it will show 500 ounces of silver in a Tomahawk cruise missile. So a year ago when I was at the Vancouver Resource Conference speaking, I said that. And a man came up to me and says, that was my program. I still work with the military. And what I'm telling you is declassified. He would always say that to me. And he said, look, you're right. There's between 15 and 16 kilograms of silver inside of a Tomahawk cruise missile. But that's just one missile. That's one high-tech missile in aerospace and all of these things that need copious amounts of silver. And so he came back to the show this time, and I saw him, and he indeed said, you are correct. I verified it. That there is indeed 500 ounces of silver. But the interesting thing about it, when we look at the silver supply demand fundamentals that we're all focused on, where Silver Institute tells us there's 250 million ounce or thereabout shortfall for 2 years in a row in silver, where more demand, less supply, but yet they ignore all military. There's no mention of military in the supply side or in the demand side.
It's not a line item anywhere to be found.
Yeah. Right. And so when you look at all the wars that we were involved in, either participating indirectly or funding munitions indirectly, there's a concerted effort to hold the price down, where Bank of America can be short almost 1 billion ounces of silver. What the hell would they do that for? Mm-hmm. Well, they're being asked to do it for the military industrial complex, would be my guess. But at the same time, you are seeing the exchanges being bled dry, literally bled dry. The LBMA, we saw one of the biggest deliveries off the Shanghai Gold Exchange ever over the last few weeks. And so you're seeing massive deliveries in Shanghai, massive deliveries in the United Kingdom, massive deliveries in Chicago, massive deliveries off of the ETFs. And what's really interesting is that right now, and this is as of today, the price of silver on the Shanghai Exchange, the premium over the LBMA and the COMEX price is $2.89. So they're telling us that silver is $2.90 higher than what it is on COMEX and the LBMA. This is called arbitrage. Mm-hmm. They are slowly turning up the heat. It was $2 higher not too long ago. And there was a time when it was below the cost of COMEX. Now it's almost $3 higher. And gold, the same thing. Gold's about $100 higher in Shanghai. They're slowly turning up the heat, and those traders who have access to both markets will indeed arbitrage what is not nailed down. They are doing what they can. Think methodically. Now, if they were just shotgunning and telling the world and it was all over the mainstream that this is what they're doing, wouldn't be so easy.
And they'd have competition.
Yeah, and that's exactly right. And so it's very interesting to me that this is not a mainstream topic. Yeah. And you got to dig to find it. But all I can tell you is that the price in Shanghai is much higher for both gold and silver than it is in London and in Chicago or New York. And this is a trend that will continue until there are no longer any bars to be delivered. Let me explain it one other way. Currently, right now on COMEX, in silver, the registered category, the bars that are available for delivery. Last time I talked about this with you a week or two ago, it was 1,500% rehypothecated. Now it is 1,656%, meaning roughly, if you realize each contract is 5,000 ounces, 1,000 ounce bars, roughly one person out of 1,656, this is called 1,700%. 1 out of 17 would get their bars. The rest would be cash settled, and there'd be nothing left in the exchange. That's the same thing as, that's a scam. And if that's the exact same thing that happened to Bernie Madoff. If no one's asking for their money back, you can keep the game going. But if everyone says, I'll stand for delivery, 1 out of 17 gets their bars. The rest don't. They get cash settled, force majeure, whatever. So we're going to get to that point where no one's going to deliver at those prices. And then the price setting mechanism, in my mind, at some point moves eastward, whether it be to Dubai or Shanghai or to Moscow, because it's real. And they're the ones buying it all. And they're offering higher prices right now to attract slowly as much as they can that isn't nailed down. And gold, it isn't as rehypothecated as much as silver, but it is 508%. So for every 100 ounce gold bar, there are 5 people that think they own it, but only one's going to get it out of 5. So this is a fractional rehypothecated scam system where the futures markets are controlling the price of the metal. And the only reason that this is allowed to go on, where the Chinese and the Russians and all the people who are accumulating aren't freaking out, is that we're playing right into their hand. Yeah, sure, we'll hold it down enough so you can buy it, exchange it for physical, and take delivery in Asia and arbitrage it over there if you want, but it ain't ever coming back once it gets over there. That's the moral of the story.
That's when we get to unobtainium. You talked about how people don't know this, and of course there'd be competition for this arbitrage if we did, and if we were screaming it on mainstream news. What people don't know about also is what David Morgan was alluding to here just a couple of days ago. He's talking about gold outperforming all major currencies here in the last 100 years. The chart there speaks for themselves. We're at 99% of the value almost gone now in the last 100 years. At what point do we get to zero? Are we close to that moment where everybody realizes that chart and then suddenly ditches the dollar or whatever other currency and decides to get into physical? Are we close to that, Andy?
Yeah, well, there's a, and I don't know how valid it is, but there are a lot of people talk about something called Operation Sandman, which is basically just that, where there's already an agreement between 150 or 60 countries to dump the dollar and treasury market all at once when the time is right.
Yeah.
But you could argue that is slowly and methodically what has been happening. What have the central banks been doing? Buying more than any time in history. What is gold? The only other tier 1 asset in the world. And so when you look at the central bank buying this year, China was number 1, Poland was number 2. But if you look at the list of countries that bought lots of gold this year, almost every one of them has either applied for or is express interest in joining the BRICS. And the only one that sticks out off the chart to me, too, would be Poland and France. But I will say this, that it's interesting. Poland was number 2, and the head of their central bank, Adam Lipinski, made a comment saying that when the power gets shut off to the digital system, and everyone's money is either lost or unaccessible, gold will be the springboard from which a new system arises.
Yep.
And so you have the central banks understand exactly, and maybe Poland more than anyone. But yeah, I think that it's just certainly just a matter of time before you start to see a rush to accumulating. The central banks will rush to accumulate it, but they've been doing it very, very slowly and methodically, not only accumulating it, but repatriating it and pulling it off of the exchanges, which is a big thing, removing any and all counterparty risk. And that's one of the beautiful things, whether you're talking cryptocurrency in your own possession or physical metals in your own possession. They are assets that are not simultaneously the liability of someone else. So this is not lost on the central banks. And again, this is why they aren't freaking out about the Western suppression, where it's falling right into their hands. And when you see China buy for 14 straight months and add 287 tons in the last 14 months, that substantial. When you see 40 million ounces taken off of COMEX in the last 3 years, or almost 900,000 in one day last week, and that's unheard of. So yeah, it's happening. And I expect you will see the trend start to accelerate as we get closer and closer to that moment where it's mass realization.
Right. Can we talk about real estate here in Canada? I want to have your take on this. We've seen a boom over the last number of years, of course, with the very low interest rates. To some extent, I was talking to friends also. A lot of that boom was helped and propelled by all of this new immigration, but that now is slowing down. I had this article yesterday. This is a press release here from the government of Canada saying that it was now going to cap the international student permits being issued here moving forward. So it's kind of like, okay, the free lunch is over there. And on top of that, we're seeing Canadians now not using their line of credits. That's long gone, maybe a year ago or 2 years ago to pay their mortgage. Now they're using their credit cards, and now their credit cards are capped out. So what do you think is happening to the real estate market? In addition to that, we're seeing more and more banks now starting to grant fewer and fewer credit lines. So it appears that we might be moving into this great taking scenario. You know, I talked about the documentary, but is it also perhaps predatory, in a way where this is all being by design here to concentrate and create an opportunity, a buying opportunity when blood is in the streets here for bigger firms like BlackRock to take away all of these real estate assets from the common folk and to get into this scenario of by 2030 you'll own nothing and you'll be happy? Is that what we're seeing play out right now with real estate, Andy?
Well, a lot of people don't realize the difference between Canadian real estate and U.S. or in the way that the loans are structured, where in the U.S. you can get a 30-year mortgage fixed. And in a 30-year mortgage fixed, you realize that the majority of the people who own homes right now are locked in at those low rates from a few years ago, 3, 4, 5% max, almost all of them. And that's why you're seeing the residential real estate in the United States, that market not get hammered yet, like we expect to see the commercial real estate, where you got the head of Cantor Fitzgerald just came out and said he expects to see $1 trillion in defaults over the next 2 years, unless interest rates fall quickly. But in Canada, you don't get to do a 30-year lock. You do, I think, a 25-year lock, a 25-year loan amortized, but it has to reset every
5 years, 7 years max to lock it here in Canada.
Right. And so, you know, look at the position that the Canadians are in right now. The last lock they had was very low. Now it's 2 to 3 times what it was. It's going to put great stress on the real estate market. And I think in the United States, you know, having a 4% lock is great. I apologize. This will be done in a minute. We have workers in our house. It'll be done in a second. Hope it's not too loud. No. But that 4% or 3% 30-year lock is great until you lose your job. And when you see that, you know, U.S. commercial real estate prices have fallen double digit by 10 or 11%, you know, that's the worst decline in over 50 years. And these buildings, because of people working at home and you know, the slowing economy, and this is not going to get better anytime soon. So it will start with the commercial real estate market, which will then hurt a lot of corporations and the banks. It's kind of like a doom loop, because the regional banks in the United States own 70% of all the commercial real estate loans and 70% of all the small business loans. So if you got the head of Cantor Fitzgerald saying within 1 year, 700 billion to 1 trillion, or within 2 years, 700 billion to 1 trillion in defaults will happen. Well, that's going to blow up the banks. It's going to blow up the small businesses, going to blow up commercial real estate, which will then affect residential real estate. And so I would just simply say that Canada is just a little closer to the fire in the respect that what are these people going to do who have to reset their loans in the next year or so at much higher rates, and a lot of them will be underwater. So, you know, because one of the byproducts of purchasing real estate at 3% is that the prices are high. Lower rates, higher prices, higher rates, lower prices. So if they have to reset at a rate that's double plus what they locked in at 4 or 5 years ago, then they're probably going to end up being underwater and certainly not being able to move laterally. They'll go backwards. So yeah, it's a problem, JC. It's a big problem, and I think commercial and residential real estate will come into focus very clearly here in the next year or two as this all starts to play out. And that's the problem when you manipulate interest rates. All of the manipulation centers around interest rate manipulation,
Yeah.
and everything else is a byproduct of it, like suppressing metals, because it created an illusion of prosperity.
Yeah.
And that those days are over.
Yeah. I read an article from the CMHC, I believe in November or December, suggesting that a lot of those Canadians are talking about now, that new rate is coming up in March of this year for them. So either they renew, whether they qualify or not to renew. There's these schemes of having maybe 60 or 70-year-old mortgages now, which sounds a lot like indentured servitude. But at any rate, there's big problems here coming up. I appreciate that. Andy, in the last segment, we're already 40 minutes in. I wanted to have your take on this interview with Tucker Carlson and Tony Robbins. Now, to some extent, he's talking about his new book about investing and all that. I did listen in detail to what he was suggesting in terms of the benefits, I think, of investing into some of these private equity firms. And to some extent, I disagree in the sense that there's still a lot, and in this late stage of the game, so much counterparty risk that we don't yet realize that to me maybe is not the best way to go moving forward. But there's two things in there that I liked. One of them, and it's something that he wrote in his first book when I met him in 1992, I believe, in Ottawa, when he was doing a conference. He said, pay yourself first, right? And I remember that early on. You remember that, of course, from your father as well. But he also talked about pattern recognition, about to be a good investor, you need to know what season you're in. So he went back in history talking about humans being cold and being scared in winter. But once you know that there's a pattern and that there's a spring coming and then a summer and then a fall, you can plan your investments throughout your life. And he explained the fact that we are maybe halfway, maybe 3/3 of the way now into this winter, but that spring is coming also. And we need to think strategically here moving forward. So I thought it was a fabulous interview, apart from maybe getting into some of these counterparty risks, heavy, in my opinion, investments. What were your takeaways from this interview, Andy?
Yeah, he's fun to listen to. I mean, he's quite an orator.
Yeah.
As far as your first comment on private equity, I believe if private equity were to value their assets, mark them to market, they would be in very bad shape. A lot of these assets that were bought, private equity was dying to buy assets in an environment of low interest rates. They wanted income, they wanted yield, so they would go and buy many things that were improperly valued, and as rates have risen, they even more improperly valued. And so marking those assets to market, I think it's the bloom would fall off the rose rather quickly. The private equity market right now hasn't been doing much because there isn't much to go after. But in the environment that we had seen, where everyone was trying to buy anything because all the money that was out there and the low interest rates, and I think that I agree with you very much on that. I liked, and I did find it intriguing in terms of the patterns. And he said, that certainly after the good times, which he would call the summer, that it will fall surely as this comes. You get into fall and you get into winter. I found the most interesting thing he talked about were, in my opinion, in that interview, was how in order to achieve anything, you must have a plan. You can't just have, resolution without a follow through, without a plan. And that's why I often talk about being methodical and being plotted and sticking to a plan and to figuring out what that plan is and sticking to it.
I think let me just add to that, Andy, just a second. Too, me too. That was the big part here too. He says, where do you want to be? Where do you want to go? What is it you want? And then you realize where you are now, and you measure the gap between where you are now and where you want to go. And then you address a plan to that. And then you measure as you go your progress. I think that's fabulous. It's not taught to kids in high schools or in universities these days. I think that was really good.
Well, I will use you as an example, and not to make you a guinea pig, but look at the level of success that you have achieved, and it wasn't easy. You work your ass off, but if you wanted to be like JC, you start where he is today and you work backwards. What do you think it takes you think that he's not spending hours and hours and hours and hours and hours studying and researching and making relationships and when he comes to Florida, dropping in and saying hello and doing all of the hard work that it takes to get there? And he talked a lot about that it requires looking in the mirror. It requires doing the hard work. it requires having a plan and sticking to it, a goal. And I think in any business endeavor I've ever been in, or conversation, I look at the end game and work backwards. What do I want? What do they want? And it's not just what I want, it's what do they want. But looking what you've achieved online, becoming a celebrity with millions of people watching you and trusting you and allowing you to create a career out of it, is something that I don't want to underestimate it, saying that anyone could do. But the point of it is that this is something that you have been able to do through hard work and a goal. And I think the same thing is true with a lot of people. You first identify where you want to be, and then you do the hard work. And that to me is what the one piece that I took the most out of it is, what is the gap? How do you get there? And how much work do you have to put into getting there? But it's doable if you work hard. And I believe that. I mean, I'm the most unlikely person to have gotten to where I am. When we started this company, 34 years ago next month, it was on a loan from a friend and in a tiny one-room office and a wing and a prayer. Yeah. But, you can get there. Now, I will tell you that I don't know that my goals were aligned with where they are today, because when I started my company, there was no internet. Part of it is also realizing that we live in a world that is changing very rapidly, and to find places where there are opportunities. I remember having to acquiesce to getting email, had to acquiesce to building a website, had to acquiesce to doing all of the things in order to achieve the goals that have become clearer and clearer and clearer as I've traveled down this path. But I think everyone should listen to it. It's inspiring, and it gives you hope that, you can achieve that. But he also says, look, winter can be tough, and so be prepared for it. And you have to, you can't be fat and lazy, especially in the middle of winter. You starve to death. So that's when you maybe have to start thinking and working the hardest. And after winter comes spring, and spring makes it a lot easier and a lot more opportunities, and then you harvest. So the point of it is that I think everyone should listen to it and take from it different things. For me, what I took from it is that hard work and a goal, you can get somewhere. And that's, I think, it was very interesting to listen to his take.
Yeah, I'm with you. And to summarize there too, the discipline and follow through, right? It's one thing to have the goal and to measure where you're at and where you need to be, but having the discipline, having the courage to make those changes in your habits, because he said like 60 or 70% of what we do on a daily basis are out of habits, and some of them are maybe not useful to where you want to go. So you have to be willing to change those habits. And I thought that was really interesting. Also, a very provocative interview.
Yeah, no, I agree completely and totally. I do.
Yeah. Last week, Andy, you told me that you're going to have a very, we always have specials for the audience members, but you said this week we're going to have something very, very special. So I've put this up on the board. Talk about these new product offerings here for the audience members.
If I could own any gold coins, like these are the old US gold coins that you can see there, and the two $20 gold pieces, the two 10s, the two 5s, and the two 2.5s. And this was money 100 plus years ago. And these are all circulated in condition. So the two 20s, this one and that one, and then the two 10s, that one and that one right there.
Yeah.
They are what we are selling. Actually, I don't think we have the Indian up here today, but we do have the two $20 Liberty and St. Gaudens and the $10 Liberty. They're in essence a half ounce of gold and a full ounce of gold. They are my favorite way to own gold. Now, unfortunately, this would exclude your Canadian clients or listeners unless they want to pay a 13% VAT tax at the border, which I have had people do. But
yeah,
the fact is that you can buy even the $10 Liberty. There's is less than a half ounce gold American Eagle right now, and I've seen that a couple, 3-4 times in my career. These are coins that if I had my choice, it's all I would own. And I'll show you. Here's another one. This is the certified version. There's the $10 Liberty.
Nice.
And that was $10 100 years ago. And here's the $20 St. Gaudens. You'll notice it looks just like the American Eagle.
Yeah.
But as you can see, this was 1908. Mm-hmm. Interestingly, it says no motto. That means they didn't have "In God We Trust." And then here is the $20 Liberty from 1907 and that we're selling. And if you're buying gold bullion, which I'm a big advocate of, I'd rather own these coins if I could, but for the last several years, the premiums have been too high. The fact that we have these here and the premiums are lower, to me, it's the best way to own it, period, if you can, if the price is right. So we do have a nice supply of those in stock. And then, of course, the silver maple leafs and other bullion items. But it's the first time I've run a special on the pre-33 coins in quite some time. We do have uncirculated if that's what you want, but this is in the same ballpark or less than the 1 ounce gold eagle or the half ounce gold eagle. It just, to me, it's a really cool. These coins were in someone's pocket 100 years ago,
Yeah.
and they're true pieces of Americana, and they're safe from confiscation according to the way the laws are written. It would be my favorite choice if price was never an issue.
Oh, for sure. I love them. And guys, if you want to check those out, beyondmystic.net/silver, you can find the contact form here to get to Andy and his staff. And if you're on the Canadian side of the equation, also, the lovely folks there sent me this discount for this week. These are the 10-ounce bars at $2.99 over spot. So there's a couple different choices for you there. Great prices, also low premium if you're willing to stock up. So that's mfbullion.ca. I'll bring that link down in the live chat as well. Andy, show me again that box set of the gold coins.
That's the type set. So you got the Liberties and then the Saint-Gons and the Indians. But the only, you're missing the $1 gold coins in here. They made 3 $1 gold coins and a couple other really rare ones that aren't like the $3 Princess. But these would be the ones that you would buy if you wanted to buy. So if you look at, for example, the law on confiscation, it says that dentists, jewelers, and coin collectors are exempt of pre-33 gold. So what we would often do for people is give them different types between St. Gaudens and Liberty, or Indian and Liberty, different dates, different denominations, and make you look as though you're a coin collector without making you exert any extra effort. What starts out as an investment can turn into a hobby really, really quick. I love these coins, and in the 90s and the early part of the 2000s, no one bought gold bullion. That's all they bought was this stuff because the prices were so close. But ever since Obama took office, the premiums went parabolic due to the threat of confiscation. And this is the first time I felt comfortable in offering them or recommending them to people. And I just think that they're really awesome.
It's really
One
cool.
other thing I wanted to mention on a totally different subject.
Okay, hold that thought.
Yeah.
Hold that thought. I wanted to show you this because I had a question about that typeset. So in Canada, I have a few of these. I love these. These are the pre-68 uncirculated in the box that came originally from the Royal Canadian Mints. Some of them are in this like paper cellophane kits also. I love these. Can you buy that typeset that you have there of the gold coins? Does that come as a package, the ones you were
Yes,
showing?
I can get them for you. Certainly. This is an older one that a client just sold and I bought it from them.
Right.
But yes, I can get them absolutely. And this is an 8-piece. There's also a 12-piece set that you can get too that's more inclusive.
Okay.
But the answer is yes, you can. And it is a very cool display or piece of our past. And and then here's like the Morgan silver dollars. Yeah. These are my favorite silver coins. If I were going to buy any silver coins, I love these. These are 100+ years old. And again, these are in someone's pocket 100+ years ago. And a $20 gold coin or a $1, $20 was a ton of money, but a Morgan silver dollar, if you pulled it in your hand and close your eyes, it tells you a story. I mean, they're very cool. Really and I think there's a lot to be said for that. And we can do that. The premiums on those aren't ridiculous either. The common theme right now is that premiums have come down a lot in this stuff. And if you have the ability to buy it without really making it a detriment to the amount of gold and silver you can own, it would be my number one choice.
How many ounces of gold are in those 8 or 10-piece sets, and how much would they go for today? I know there's probably a bigger premium also on the collectability of that box.
So the 1 ounce coin is 0.9675 of an ounce.
Right.
And so it's, for all intent and purposes, just a little bit under an ounce, a hair. You divide that by 2 for the half ounce, divide that by 4 for the quarter ounce, and divide that by 8 for the 2.5 coin, which is like 1/8 of an ounce. So I could tell you exactly how much gold is in it if you gave me a few seconds to do the math.
Calculated.
But in essence, you're talking roughly one and a half, like roughly 1.75 ounces per. So roughly 3.5 ounces or so.
Of gold in that kit. Wow, really cool. I
Yeah.
love it. Everybody's like, wow, those are cool.
They are.
Says, I inherited some. Oh, lucky you.
Yeah, they
Really
are
cool.
very, very cool. And
Yeah.
that's part of the thing. That's what I love so much about them is that the history of them. And you can get some older coins from the Civil War era, the $20 gold pieces that from the 1860s and whatnot. That they're just, it's a true piece of American history. And this is why when people say, "Do you think gold will be confiscated again?" I don't, because prior to 1933, you would have had this in your pocket. Some of it. Everyone had it. And now no one owns any gold and silver. It's such a minuscule amount that is held by the public that the backlash it would create would not be worth it. And this is why I think you could see SLV, which is the largest stockpile of silver in the world, or GLD, the third or fourth largest, held by JP Morgan and HSBC Bank, respectively. That's the way to confiscate gold and silver without ruffling feathers, breaking laws, infringing civil liberties,
and causing a huge uproar. Yeah.
So, and just one other article that I
the
thought
last
was
point you wanted to make before we go. Do you remember?
Yeah, and that's what I wanted to. One last thing on a separate article, on a separate thought. One of the things that I like so much about gold, and Bix, who I'm jumping on a show with here pretty quick, often says, if you don't hold it, you don't own it. It has no counterparty risk, and whether it be crypto in your hand or gold and silver in your hand. And I read an interesting article that really kind of hits home to that. JP Morgan has responded to the rising threat by allocating $15 billion annually to technology aiming to fortify its cyber defenses. This marks an increase from $14.3 billion spent in 2022. The company relies on a workforce of technologists actively engaged in securing nearly 62,000 cyber threats a day. So they're getting attacked every single which way, left and right, all day long. And in a world that's very digital, that is becoming very sophisticated, it's not just the people who with good intentions that are sophisticated. And so in a world where, the ability to have the whole system shut down, whether it be a cyber attack like the World Economic Forum is simulating, or the movie that the Obamas produced on Netflix. You're hearing that all over the place these days, and so, or just some sort of massive hack. I think there's a lot to be said for being old school, being analog in a very digital world, and just kind of caught my attention that you got a bank that's spending $15 billion a year in order, over $1 billion a month to protect itself from cyber threats. What does that tell you? I mean, to me, it makes holding a portion of your wealth in your own possession really very valuable. And Adam Lipinski, the head of the Polish National Bank, the number 2 largest buyer of gold in the world last year, said that when the whole system shuts down, which is electronically based, gold will allow us to have an asset to spring, from a new beginning, and something to that extent. So yeah, this is wealth, you guys. It's wealth in very uncertain, scary times. And I think that, to me, is the way that I look at it. It's not an investment. There are plenty of things to invest in. This is a way to take some of your money off the table and put it in a safe form and hold it yourself.
I love it. Those are the perfect closing arguments. And folks, if you want to join Andy also for the next interview with Bixweir, you can find that on roadtoruda.com. And finally, again, if you want to get some of these really cool special gold coins in your own possession, you can find them at beyondmystic.net/silver. This was the Beyond the Vault weekly updates for January 24. I love you guys. Thank you so much, Andy. And we'll see you soon.
I'll see you next week. Everyone stay well. Thanks again, JC. Take care, buddy.
Thanks, man. Take care.